Bitcoin typically has up and down cycles, bull and bear cycles, and up until this most recent correction, the euphoria was high. It felt like everyone was feeling like we're in a bull cycle. Have we seen the top of this bull cycle? And if not, give us a prediction. The people always want predictions, and everyone hates giving predictions. But I'm going to put you on the spot. I'm going to start with you, Cathie, and then go to Anthony.
Yeah, well, I'm in print, and we are in print, ARK Invest, based on the research that Yassine El-Mandra has done, that institutions will become a very important part of this ecosystem. And if we use those two numbers, that range 2.5 to 6.5%, you go towards the upper end of that, say 5%, that alone would add $500,000 to Bitcoin's price, just as institutions try to get a foothold in. So we're extremely optimistic about Bitcoin, and I'm more optimistic now after this correction. In the equity market, you call 20% a bear market. I don't know what they call a bear market in crypto. So I feel, though, that as Anthony said, that we haven't even begun the institutional movement into the space. And so just that one use case gets us to that kind of price. Of course, the volatility will be with us. My compliance department would be very upset if I did not add that. It's not going to be straight up. It's not a super cycle without 50% corrections. And beware, from a leverage point of view, you can lose everything out there in crypto if you're a leveraged player. So buyer beware, be careful, but hang on for a beautiful ride. I think this volatility is almost good news, because it is a lesson. Hey, this is a volatile asset. As long as investors describe it accurately, or asset managers describe it accurately as very volatile, although the volatility, if you look long term, is coming down. It's still very volatile. I do believe this notion of a super cycle would never have another 50% correction. That's out the window. That's good. That is really good, because regulators don't like any guarantees like that. So you've got that one out the window. You've got the price lower, so individuals won't be top ticking in the mid 60s, right? Much better price here. And you've got two people, well, many people at the SEC, but two in particular, Gary Now, who is an advocate of its place in the financial world, as well as the director of research at the SEC, who was promoted and now reports directly to the SEC chairman, in this case, Gary Gensler. So the SEC has placed a high priority, and we know in the last 4 years, since their first request for information, and we did send a response. We felt at that time, 4 years ago, we weren't ready from a liquidity point of view. I think that has changed, and I think the SEC's knowledge is terrific. I think there are a lot of, they've investigated every nook and cranny. So I think we're much closer. I think ESG is the second reason that it has gone down. Environmental, social governance, primarily environmental. How is Bitcoin mined? A lot of institutions are asking that question, and ESG has become a very important strategy, especially in Europe, increasingly in the United States. And this was one more risk that it was going to keep institutions from migrating into this new asset class. This is a new asset class. And from 10, 11 years worth of data, we can see the low correlation of returns compared to other assets. Institutional investors have to consider this, because certainly their competitors are, as another form of diversification and opportunity. And I think this put that off for a moment, but I think that the spotlight on the environment is going to cause something really interesting to happen here. We just wrote a paper with Square about the ramifications of putting Bitcoin mining into a solar power wall merchant power ecosystem so that it could absorb all the extra energy coming from the sun after the battery, the power pack is filled up. That would add a new dimension of economics to this ecosystem and would encourage homeowners and utilities to add more solar to their own ecosystems than otherwise would be the case. So it's actually going to accelerate the movement into renewables. I think that's what's going to bring institutions back. And I think Elon Musk highlighting, is this a risk that I have considered adequately as I put Bitcoin on my firm's balance sheet? I think he's going to be a part of the solution. So we think what has happened here is actually going to turn into good news. I think a bigger point that needs to be made is that progress takes energy. And it seems as though any lightning rod involving, in this case, it was coal in China, is going to turn back the clock. But we really need to keep moving forward. This is progress. As Anthony mentioned, a DeFi system that does not fall apart after assets are cut in half. That's a pretty powerful source of progress, I think, from a financial system point of view. And I think just, again, the notion that Bitcoin mining could actually help renewables proliferate faster than otherwise would be the case, I think is going to win the day here, and that ESG will not be as much an issue as people think going forward. Bitcoin is the safest, the most secure of the blockchain technologies. And I think that is a huge consideration for institutions: security, safety. Is this thing going to blow up on me? So Bitcoin is the most secure, makes sense. It's the right place to start. The correlation of returns very low. And it also is the leader of the pack. If you look at 2017, as the crypto world took off, led by Bitcoin,